Yeah, good evening, guys. Um, Welcome to my YouTube channel. This is, let me introduce myself. This is Analysis King. I want to say a big thank you to every single person who has taken our time to subscribe to the channel. I want to also say a big thank you to every single person who has actually watched the videos, right? If the videos have actually changed the way you see the market, please leave a comment section below and actually tell me the kinds of videos you actually want to see so that I'll be dropping them as time goes by, right? So before I start the video, I want to say a big thank you to my father, Pastor Jimmy, for giving me the opportunity to actually talk to every single person, for giving me the opportunity to share my ideas to the audience, right? So I want to say a big thank you, sir. And I don't take this for granted, and God bless you, sir. Um, Today we are actually going to talk about what I term protective highs and protective lows, right? Right? We're going to talk about protective highs and protective lows. The first thing you need to understand is the market moves in stairs, right? Just like in this particular region. Let me move this. The market moves in stairs, right? It moves in this particular region, right? I'm a kind of a structured person, right? I'm a structured trader. So I try to talk about structure more in most of my videos because the truth is the market is all about structures, right? The market is structure based. Any other thing apart from structure are just additionals, right? The market is structure based. So anything that is more than or anything that is um anything that is outside structure are just additionals, right, to complement the trading. But the truth of the matter is trading is all about structure. You need to understand the structural analysis of the market, right? So we can see now that price has been moving higher, right? We can see now that price is moving higher. Now, where you actually want to look at or where you want to look at for the swing high and the swing lows are actually the higher time frame. You want to be looking at your higher time frame for your swing highs and your swing lows for your potential stop losses, or sorry, for your potential take profits or your potential regions where you are targeting to take your trade, right? So you want to be looking at your higher time frame highs or your higher time frame lows to actually give you a wide perspective of the market, right? So if you are looking at the 5 minutes or the 15 minutes, right? If you're looking at the 5 minutes, if you're looking at the 1 hour, right? So if you're looking at the 1 hour, you are actually wasting your time because you are removing the bigger parts, the bigger picture, right? The bigger perspective of the market, which is from the 4 hour to the daily, to the weekly, right down to the monthly, right? So those regions or those time frames are more important, right? Are more important than the smaller time frames. The smaller time frames are just used for entries, right? So all these structural regions right here, all these structural regions are what I call protective highs, right? We have the protective highs and we also have the protective lows, right? We have the protective highs and we have the protective lows. These are the protective lows, right? These are the lows in the market. This is what I call the protective lows. Now, why are they protective lows? They are protective lows in the sense that you actually see most of the higher time frame or the higher time frame lows or the higher time frame highs in the market on the from the higher time frame. You actually see the highs or the lows being formed. The best trades, right? The best trades are being taken from the best trades are taken from the higher time frame, right? The best trades are taken from the higher time frame, and they will always target the highs or the lows in the market. Now, the first question you need to ask yourself, right? The first question you need to ask yourself when you actually want to place a trade, right? When the first question you want to ask yourself is, where are the highs and where are the lows in the market? I'm not just talking about generally highs and lows in the market. Where are the most important highs and the most important lows in the market? Remember, this was one of the most important high, right? I've actually spoke about mitigation. I've actually made a video about mitigation, how to spot mitigation, right? If you don't understand it, right? Let me just explain it quickly, right? You can actually watch my video. One of my videos about mitigation is actually in the playlist, so you can watch it, right? This was a perfect example of mitigation, right? You can actually see that, like I said in the previous video, that mitigation, right? Mitigation is formed, or a mitigation block rather. This is a mitigation block. So a mitigation block is formed when the high, right? When the high or the low in the market failed to continue, right? For example, right? Let me give you an example, a quick example, right? You can actually see price going higher. Sorry, let me clean this off first. Let me take this off, right? Let me take this off, right? Okay, now if you look at price now, price is actually going higher, right? Going higher, right? Price is going higher. Now, this was the high that was actually created, right? But remember that price did not break this high, right? You can see now that price did not break this high. Instead, price actually broke the low. Now, this particular region right here, has actually formed a mitigation block. Now, the mitigation block is the last bear or the last bullish candle before the drop, right? The last bullish candle before this drop is actually the mitigation block, right? So if you go to my video, if you go to my videos, you actually get the full details of the mitigation block. Right? So let's continue with this video, right? Now, you need to understand where are the real highs and where are the real lows in the market, right? Now, if you look at if you look at this chart, we can actually see this is the USD card 8-hour chart. If you look at this chart, let me clean this out. Let me clean this out a bit. Let me remove this. Right. So, if you look very closely, right, you can actually see, like I actually explained, that this was mitigated, right? This is a pure example of the mitigation block, right? Now, the second thing you need to ask yourself is, where are the market makers actually taking the market to, right? Where are they taking the market to? Where are they taking the market to, right? Once they've actually created this kind of formation, right? Once they've created this kind of formation, where they actually want to take the market to is they will actually take it to the lows, right? They will take it to the lows of the market. Why? Because structurally, which we have seen, that there is a violation of structure here. So all you are seeing right now is a switch. All you are seeing right now is a switch from a sell side, right? You can see that price was creating a high, right? So let me label this. You can see that price was actually creating, this was the first high, right? So price was creating a high and a low in the market. Now you can see now that instead of price to break out this region, they didn't break this out. Instead, they took out the low, right? They've taken out the low. They've made this particular mitigation block to be extremely valid, right? Now, the next question you need to ask yourself is, where is the protective highs and where are the protective lows in the market? These protective highs and protective lows in the market are intentionally created by the market makers because they know that every single person will actually want to be taking advantage of these small moves, right? But they have their eyes fixed at these regions right here. All these regions are the protective highs and the protective lows in the market, right? All these regions are the protective highs and the protective lows in the market, the overall protective highs and the protective lows in the market. The market makers actually have their orders set around these regions, right? That's why you see that most of the huge moves actually happens around the higher time frame supply or a demand regions. Why? Because we have the bankers are actually looking at that region, right? Because they know that retail traders they don't look at the higher time frame perspective. All they are looking at, or all they focus on is just to make quick money, right? But the market makers, they don't care about the quick money they make, right? They actually look at the swing highs and the swing lows from the higher time frame, right? The swing highs and the swing lows in the market to look at possible ways or possible places where they can create a demand zone, which they've actually created. They created a supply around this region. You can see how clean. You can see how clean this supply region was. They created this supply region and they are heading backwards, and they're heading downwards rather. Now they have created this particular high. This high right here, their orders are around this region, right? These regions are what we call the protective highs in the market. The protective highs are actually the regions where the market makers reside, right? The protective highs resides on the higher time frame, right? On the higher time frame, exactly from the 4-hour upwards, the 4-hour, the 8-hour, right? The 4-hour, the 8-hour, the daily, the weekly. All these regions are actually the protective highs in the market. So these regions, right, should actually be your target. You can see that price came back into this region and reversed. So all we are looking for now, we are looking for price. We are looking for price since we have seen that price has taken out liquidity, right? You can see now that the double tops are actually the double bottom is actually formed in this particular chart. You can actually look at my previous video to understand double tops and double bottoms, right? Now you can see that this double bottom was actually created. Now, what do you think the market makers do? Instead of them to come back to this particular protective high, they will not come back to this region. Why? Because structurally, the buys have actually been violated structurally, meaning that they have switched from a buy side to a sell side. So all they are looking at right now is to sell this market. Where is the next region? Where is the next region where they want to concentrate on? Now remember that they've taken out this protective low. This was the higher time frame protective low that was their that was actually created by the market makers, right? Since they've created this region, structurally, you can see now that they've changed from a buy side. Let me use the trend line. Sorry. Structurally, you can see that they've actually changed from a buy side to a sell side, right? Not because of this trend line break, right? But structurally, you can see that they've actually done that. Why? They've taken out this low. Once they've taken out this low, they've actually given you an indication that they are going lower. Now they've taken that back. They've taken this protective low, right? This protective low, they were actually in this region, right? Because they knew that the retail traders, the stop losses are actually here, right? So they came back to take out the retail trader stop losses, right? They came back to take out the retail trader stop losses and they took out the protective low. Now they've created another high. This high, we have the market makers, their orders are around this region. Why? Because it is the higher time frame high, right? This is how the market makers they trade. They don't trade your 1 hour or your 30 minutes or whatever. They trade from the higher time frame, right? So you need to learn how to look at the higher time frame perspective, right? You need to learn to mark out your highs and the lows in the market from your higher time frame, right? You can see now that we have this protective high in the market. Where are they going to now? Where is the next region that they want to go to, right? Where is the next region to take out liquidity? The next region to take out liquidity, because structurally we have actually seen that they shifted from a sell side to a buy side to a sell side. The next liquidity or the next protective high and low region will be this region. So this is the region where they would want to take their profits, right? You can see now that price came back into this protective low and it is reversing. Now we are expecting price. We are expecting this market. We are expecting this market to rally up a bit. We're expecting this market to rally up a bit before going back to the downside, right? We're expecting this market to rally up a bit before going back to the downside, right? Now, where is the place where they want to take out liquidity? The next region they will take out liquidity is this particular low, because this low is the next protective higher time frame low, right? You are combining structure and you are combining the highs and the lows, the main protective or the main highs and the lows in the market. So these are the main lows in the market. The higher time frame lows are the main lows in the market. This is the way you want to be viewing the market, right? You want to be viewing the market in this particular scope. So the next region where they want to, the next region they will come to this region. Now, if you look at this region, remember that this is an 8-hour chart. If you look at this region, you will see now that around this region, we have a double bottom. A double bottom, aka liquidity region, right? Liquidity pool. Now, in this region, we have a lot of orders that are around this region, right? So what they will now do is they will tend to retrace, right? They will tend to retrace this particular chart, maybe retrace it to this region, right? They might retrace it to this region. Once they come back into this region, right, you will not enter your trade. You will not enter your trade from the higher time frame. You are only using your higher time frame as your for analysis purposes, right? And to know where the protective highs and the protective lows are actually dwelled in the market, right? The next region you'll be looking at is the lows. Is this low in the market? Remember why? Structurally, they've switched from a sell side, from a buy side to a sell side. So your ideal region, your ideal process, right, is that you are actually looking for a sell region. You are actually looking for a sell region. So all I want to be looking at is the lows. So the main lows in the market, which is this region and this region, is actually the region that I will be looking at to actually take my profits in the market. All these regions are actually the main regions. All these regions are actually the main regions where the smart money actually have their take profit regions at this higher time frame highs or the higher time frame lows. Let's look at a chart, another chart to see. Now let's look at gold. This is gold rather. I'm sorry, that was USD card. Let's look at gold. I'm actually in this gold trade, right? I'm actually in the gold trade, which I think I closed 50% of my position already. So I've closed 50% of my position on the gold trade already. Now we can actually see that structurally, this market actually it has switched from a sell side, it has switched from a sell side structurally to a buy side. Let's go to the daily. Let's see. Now you can see very clearly that from the daily, it has switched from a sell side to a buy side, right? Remember that we have been seeing higher highs and higher lows being created in the market. This is a high, this is a low, right? This is a high, the low. So we can actually see structurally, right, that we are actually in a downtrend, right? Now, but you can actually see that the downtrend has switched from a sell side to a buy side. How? By breaking this high. Since they've broken this high, all I will be looking at for this region, or all I'll be looking at this pair, is a buying opportunity, right? So all I'll be looking at is a buying opportunity. They created this demand, came back into this demand, right? Now they rallied back up. But they didn't go back fully. Where do you think their stop losses are? Or sorry, their take profits are? Their take profits resides around this particular protective highs, the higher time frame main protective highs. This is how the big money, the big banks, they trade, right? You can see that most of the big moves actually happen on the higher time frame highs and the lows, right? They happen around the higher time frame demand and the higher time frame supply. Now you can see that this was a supply region. Sorry, let me shift this. You can see that this was a supply region. It came back and retested and went back down. Now this particular supply region becomes valid. Why? Because structure has been broken. Now it came back. Now we are expecting price to come back into this region to sell. So what the institutions they actually do, they will come back, create a demand. They've created this demand that we actually seen. Where do you think their take profit is? Their take profit is around this supply region. This supply region that they've actually created as their protective high. this protective high is actually where their take profit is. So you need to have the higher time frame highs and the higher time frame lows perspective in the market. You need to understand what the big monies are, what the big banks are actually doing. You need to understand how they combine the higher time frame highs. What time frame do they look at? They look at the monthly, they look at the 4 hour, they look at the 8 hour, they look at the higher time frame. They don't care about your 1 hour or your 30 minutes or whatever. All they look at the bigger time frame to look at the bigger liquidity, right, in the market where they can actually place or take their trades, right? I hope this trade or this video was actually insightful. If this video was insightful, don't forget to comment. Don't forget to subscribe if you're a new viewer. Don't forget to turn on your notification button to actually know when I post a video. And the link in my Telegram group will be in the description below. And I will see you in the next video. Cheers and God bless.